What's up, YouTube fam? In this video, I'm going to show you guys how to sell options in a volatile market, the strategies that I use, really just keep it simple and show you guys, how you can start making money during some volatility today. So with that being said, I'll just, there's no better teacher, right, than just showing you guys a trade that I exactly took earlier today and just explaining my way through it. So I took it on SoFi. Now, here's the thing, right? Right now, we have an extremely volatile market, right? So let's get to the calendar right up to date. So here we go. So this upcoming week, we have just insanity. SoFi, Starbucks, Tesla, Microsoft, Facebook. Now, these are huge companies, and they are going to directly affect the NASDAQ, the S&P 500, right? They're going to directly affect the market. So it is going to be extremely volatile over this upcoming week, not to mention, obviously, having a new president. It's just insane, right? So it could be good, it could be bad. I do ultimately think what's going on will be bullish, but you have to be a little smarter when it comes to the markets because a lot of times bullish news was already priced in. A lot of times, in the short term, things do go down. So with that being said, here's the play I took. So obviously SoFi has earnings this upcoming Monday. Now it is before the market open. So if you do want to get involved, you would have to get involved either today or tomorrow, or at this point tomorrow. Now, here's the thing. Everyone's going to be buying and selling options during these times. And those people, in my opinion, are going to most likely get wrecked. Now, the IV is already going to be sky high with everything happening. So when the earnings report comes, you can expect the IV to spike. And that's why I like selling puts. Now, this block that you're seeing, all it does is represent our position. So what do I mean by that? Well, as you can see, our strike is 1650. So that's the top of the block. And our break even is 1594, which is the bottom, right? So basically, let's just get that there. So basically, it's really like the technical analysis behind it is just drawing out the strike price and the break even price and just asking yourself, one, is this a strong support? Now, I think it is because we're below this level and this level. And two, is it likely to bounce? Would I be happy owning the stock at these prices? Now, 1594 is not a bad entry considering that SoFi is at 18. Where SoFi is going to close tomorrow, I have no idea, whether it goes up or down. And that's the beautiful part, right? Is I don't have to sit here and relax. I don't have to sit here and stress. I can sit here and relax. And the beautiful part is, like, for my account size, I'm still only playing with whatever, $4,000 or $5,000, which, is it such a small amount? No, but is it such a large amount compared to other positions? Absolutely not. So, that's really, in my opinion, the best way to go about handling these high volatility environments is selling puts, right? And putting yourself in a position where your strike is below, powerful zones. And this is really what I've been doing since the beginning of this channel and this challenge. And, you might be saying to yourself, oh, you've been doing it since November 6th and you're only at 20,100. Now, first of all, we are up 5% in, 2 months, 3 months. We're up as high as 26%. And third of all, we've been chasing some insanely volatile moves in the sense of a lot of people would have blown a lot more money. Now, I'm not necessarily comparing. I've made some crazy mistakes that I'm not going to even get into, but if you've been watching from the beginning, you've witnessed them live. So, I'm just thankful to be in a position where the account is up and looks like it's trending in the right direction. This Con-L position is something we've been managing for months. And, one thing I'm heavily considering that I don't really see myself actually doing, but it's fun to tinker with the idea of just rolling up, right? So I can collect more credit. Now, again, I don't see myself doing that because I think just based on where we're at on this stock chart, like, I'm happy with this price, with this with this strike. We're officially below a swing low. And ultimately, would I hate buying at 45? No. And if you've been with me since the beginning, I've been rolling down since 60. So there's a lot that has happened, just a lot going on. But in terms of handling high volatility moments, right, because this week is going to be insane with these earnings, my highest recommendation for the average person is going to be selling puts and doing it where, you can get a strike price below a swing low. And the reason being is because, these are stocks See, the reason why earnings season is so great for people like us, people that like to sell options, is because you have stocks like Starbucks, Tesla, Microsoft, Facebook, IBM, Apple, stocks that you'd probably want to hold, right? But the premiums are jacked up. Now, the price of that is going to be the volatility from the moves, right? Like, let's look at Netflix, for instance, what it's done. Just insanity. Now, the beautiful part, right, is if you sold puts, let's just say with your strike below here, you would have cashed 100% after this move, right? Now, obviously, you won't make as much as if you would have bought calls or bought shares, but that's not the point. The point is you're setting yourself up for a place to not have to buy unless it gets below a swing low, while being able to capitalize on the upside, right? Because if you would have bought puts, then you would have gotten destroyed by this. But since you sold puts, it's like the only thing that could have happened is it could have came below the strike, which in case you would have had to either roll or just get assigned, or it rides up and you watch the premiums become worthless and you're profitable right away. So that's basically how we've been able to do it on this account, for the last 3 months. And like I said, I've made some terrible, terrible mistakes, and that's how I've taken this account from 25 all the way down to 16. But, just letting the odds play out, letting things play out is how we've been able to get back at 21. And if I let things play out even more, right, if I was more detached, because that's the thing, stats do show that people who make too many decisions end up doing worse. And I was a real case of that, right? Some of the decisions I made, that if I would have just not touched it, my account would actually be at 27,000. But tons of names to play this strategy with, tons of things happening. I'm not going to get into every single stock that I think you guys should look into. I could do that in another video. If you want to see that in another video, make sure to like, make sure to comment, make sure to subscribe. But I hope you learned a lot. I hope you can take a lot away from this strategy of just simply selling puts, getting in a way where, you have this beautiful zone that, is protecting you basically. Now, ultimately, can this zone mean absolutely nothing, right? And can earnings send it down here? Absolutely. But trading the markets is just a game of percentages, and I like playing games where there's a high percent chance I win, right? That's how I can sleep at night, is by knowing that every single trade I take, there's a better chance of me winning than losing. Now, of course, a loss can be devastating, but if you are selling puts on a stock that you don't mind holding, then there's really no such thing as a loss in the long run. So, again, I hope you guys enjoyed this video. If you got a lot out of it, make sure to like, comment, and subscribe, and I'll see you guys tomorrow for the next one.